Why banks deny your loan even if you have a job. You have a job, you make money, you pay your bills. But the bank still denied your loan. Why? Today I'll show you the 5 real reasons banks reject people, even if you think you've done everything right. No or limited credit history banks. Banks want to see how you've handled credit before. If you have no credit cards, loans, or payment history, they see you as unknown, and unknown equals risk. This is called being credit invisible. High credit utilization. If you're using more than 30% of your credit limit, that's a red flag. Even if you pay your bills, banks think you're overextended. Tip: keep your usage under 10 to 30%. Too many recent applications. Every time you apply for credit, a hard inquiry is added to your report. Too many equals desperation. Banks don't like that. Only apply when needed. And wait 3 to 6 months between applications. Low credit score. Even with a job, if your score is below 600 to 650, many banks say no. They want to see good habits, not just income. Improve your score first before applying. Insufficiency of credit type. If you only have credit cards, banks may think you lack experience with loans. A healthy credit mix includes credit cards, car loans, student loans, etc. Try adding a credit builder loan to diversify. So what should be done? Start with a secured card. Use less than 30%. Always pay on time. Monitor your credit. Don't apply too often. Mix your credit types over time. Getting denied sucks, but now you know the real reasons and how to fix them. Subscribe for weekly tips and let me know in the comments. Have you ever been denied a loan? What happened?